Hey guys, welcome to Dividend Talk, where we discuss everything dividends with a unique European flavour. As dividend investors, we love dividend income. But sometimes those 2%, 3% yield and 3 or 4% dividend growth rates just doesn't cut it. So let me ask you a question. Are you tired of low returns from your traditional savings accounts, or are you tired of actually earning 2 or 3% yield from dividends from companies such as Johnson & Johnson and Coca-Cola? Do you want to generate passive income that can help you achieve your financial goals faster? If so, stay tuned, because I'm going to give you 3 stocks that have a staggering 7% or more dividend yield. That is more than 4 times the dividend yield you would get on the S&P 500. So stay tuned, as these stocks might just be what you're looking for. See you on the inside. So the first company that I'm going to share with you is British American Tobacco. Ticker symbol BATS if you're buying them on the London Stock Exchange, and ticker symbol BTI if you prefer to buy them on the New York Stock Exchange. At the moment, they yield a whopping 7.79%, and they have even thrown in some decent dividend growth over the last number of years. You can see their 5-year annualized growth rate for dividends stands at 16.82. Understandably, this has come down over the last number of years, and last year their dividend raise was only 1.02%. But still, a 1% growth rate with a 7.7% starting yield is a good enough place for me to start. And if you look at their share price, you can see they have dropped by just about 50% from their highs back in 2017 all the way to around £28.39. So unfortunately, if you bought them in the highs of 2017, even with high dividend income, you're probably losing money on these guys. You can see from around 2019 we're a little bit more range bound, and it might be a better opportunity to buy this company at a much favourable starting price. So one of the first things I like to do is I like to run companies through my dividend stock screener that I use on Kyfin, and I just look at key metrics such as revenues and margins, what their free cash flow is, can they afford the dividends, and what their debt looks like. Can they manage that debt? So if we look at British American Tobacco, we can see that they actually look pretty good all around. Their total revenues in 2013 stood at around 15 billion, and that has increased significantly to 27 billion in 2022. Their gross margin profit level has actually been rising, which is good to see over the same period, and their net income has nearly doubled in the same period. I also like to look at the free cash flow, which stands at around 9.8 billion, and the dividends paid last year was 4.9 billion. So it's around a 60% payout ratio. So they have more than enough room to pay that, and again increase that, albeit quite slowly over the next couple of years. If we look at the dividend per share, we can see that again the company like to increase this year on year. It does look like there was a small cut here in 2017, but they do have a decent track record of actually paying out dividends consistently. If you look at the company's revenue, you can see that they are divided across 4 main regions. The bulk of it comes from the US, both north and south, and along with Africa. Then we've got about 6 billion coming from Europe, and then we've got around 4 billion coming from the rest of the world. If you look at how they break up this revenue by category, we can see that their new categories totals around 2.8 billion, which is around 10% of their overall income. Their combustibles, which is your usual cigarettes, makes up the bulk of it, which is 83.3%. But they know this is a declining market, and they're really starting to try and push their new categories investment, and they aim to have around 5 billion in revenues from this sector before 2025. So you can see this team the whole way throughout their annual reports or all their investor presentations. They talk about building a better tomorrow and reducing the health impact of their business to encourage smokers to switch completely to alternatives to their combustibles. They're trying to do this by growing the new categories business, as I said, as quickly as possible. And they've set themselves an ambitious target to reach 50 million consumers of non-combustible products by 2030. This is the one area for me that sets British American Tobacco apart from their competitors such as Altria, which is another high-yielding dividend stock. I think they have a better grasp on trying to transition into this new alternative consumer market, and they are trying to grow it quite rapidly, and so far they have been quite successful in it. The second company I want to share with you today is Enagas SA, ticker symbol ENG. Now, Enagas are a Spanish gas utility company that have a whopping dividend yield of 7.58%. You can see their annualized growth rate is also quite small. It's in between 1 to 2% annualized over the last 3 years. But again, with a 7.58 dividend yield, I don't need that growth rate to be too high, so I'm happy once they are growing that slowly over time. So for those that don't know a whole lot about Enagas, Enagas are a midstream company that have been set up in 1972, and they are an independent European transmission system operator, which means that it helps to distribute and control the supply of gas throughout Europe. The company also gives a nice picture of what they are involved in, and as the name suggests, they are very much heavily involved in anything got to do with the gas value chain, from the extraction of natural gas to liquefaction of it to transport of it, and again to distributing it to its customers. As a Spanish company, they are heavily involved in Spain, as you can imagine, but they also distribute gas to continental Europe, a little bit in the USA and Canada, United Kingdom, and 7% of their revenue comes from the rest of the world. So one thing that I do like about Enagas is that they have made a commitment until 2026 where they have a floor dividend per share of around €1.70. So you know exactly what you're getting from these guys. And in actual fact, they increased this to 172 in 2022, and they have also reaffirmed their commitment to holding this dividend policy until 2026. So certainly for the next 3 years, you get a high dividend yield from this company that looks to be relatively safe. From a total return point of view, I suppose you'd be worried a little bit about the share price of the company, but so as you can see, it's trading at around €18.25. So the only real risk here is that the share price might continue to decline to the lows that we've seen in 2008, 2009, when it was down around 10.52%. But certainly from a dividend perspective, it looks reasonably safe. The revenues are more than predictable for Enagas. They are really committed to the dividend, and they have a progressive business model where they are trying to capitalize on what was happening between Russia and Ukraine and trying to create an independent European TSO. And the last company on my list was pointed out to me by a podcast listener, which is JMAB, which is a Swedish property housing development company, and they currently have a dividend yield of 8.16 and also decent annualized growth rate at around 3% over the last 3 to 5 years. Now, JM is one of the Nordic region's leading developers of houses, and they primarily operate in Sweden, Norway, and Finland. So basically, the company is involved in every aspect of property development, from the acquisition of land to the sale of this new home to tenant owners or personal ownership. So owning a company like this, there is obviously some risks, particularly around inflation and the cost of materials, which has affected the company over the last 12 months. That has meant that Some of the housing projects that were planned did not quite take off, or it's a little bit slower than anticipated. So of the three companies that I have mentioned, I think this one has the greatest risk associated with them, but they seem to have good management and the balance sheet looks quite strong that they should be able to weather any risks over the next couple of years. But they do have a clear dividend policy where they plan to pay 50% of the group's profit after tax over a business cycle. So as full disclosure, I own British American Tobacco and I also own Enagas, but I currently do not own JM, but they are certainly on my watch list as a potential high yielding dividend stock. So there you have it. Three companies that have dividend yields above 7% that can give you some serious passive income over the next 3 to 5 years. If there's any companies that you would add to this list, please drop them in the comments below. And also, if you like videos like this, please consider hitting that like button and subscribing to the channel, as it really helps us here at Dividend Talk.